This is a video chart presentation of Alternative Energy Partners brought to you by allpennystocks.com with technical analysis by Andy from Understanding Venture Plays. Alternative Energy is a NASDAQ bulletin board stock trading under ticker AEGY. This is a quick look at the candles. See, it didn't trade much back here. This is a 6-month chart. Not a lot of trading went on, not a lot of volume. Recently, much more volume. Big downtrend followed by a huge gap up. We'll take a look at where this is. A little bit of a triangle right now with a big gap to fill. We're going to take a look at the lower indicators and see if they're telling us anything. Getting an uptrend in the MACD. Seeing it heading towards zero. We're getting the histogram looked like it was going to drop a bearish cross right here, but it actually held on, and looks like it's trying to trickle back up towards the north side. It's what you want to see. You want to see that break of the money line. You want to see this histogram stay positive. A lot of times people refer to that as the fast line leading the slow. Kind of the same look with the PPO. Actually on histogram on the downside, just getting a bullish cross. It looks like it's going to come, so we're going to keep an eye on that. Trend coming down to a very, very slow pattern. Not much strength to the direction of this trend at this point. That 9.95 is extremely low for the ADX. We're going to look for this to turn back up. Of course, it doesn't tell you which direction. It only tells you strength of the direction. So we're going to look for this to turn, and then we'll be keeping an eye on the positive and negative DIs to see how they split and which way. It'll give a hint as to the direction of the strength it's getting. Here we see, this is something that I will reiterate over and over again on charts. Big separation between the 7, 14, and 21. If you get this big separation, it'll retrace a lot of times and try and pull these things back together. A little bit of sideways motion with the longer term MFIs. We'll expect the 7 to come pulling right back up. You can look back at the past. It gets big separation, it comes back. Get the big, huge separation here, it comes back. So we're going to look for those to pull back together. And you see when it gets back up around there, what this 14 and 21 are doing. It'll give you a little bit better indication. Accumulation distribution on a big slide. We'll look at it from right through here. And kind of indicative as the price per share has slipped down a little bit. The candles are going to play a big role in this. We're just looking for hints from these indicators. Shaking money flow actually in a little bit of an uptrend. Looks like it's trying to break back above zero. Of course, you want to see this above zero in the green is where you want it to be. CCI is back out of oversold territory. You want to see this hold above. If it starts to come back down, that's a sell point for a lot of people. As soon as it breaks back down negative 100, it's a buy point where for people that uses CCI coming back up out of it. So you want to see it stay there and make a turn and start heading towards zero. Take a look at this full still. Obviously very bottomed back in here, but got close to it again. This is when there was very little trading, so the indicators tend to run to extremes pretty quickly when there's very low volume. Right now, sitting near a bottom, trying to come back out. A little bit of a sideways uptrend to it. Nothing extremely pointy. That's okay. You want to see this hold above 20 and make a move. Bull chart territory is getting over 50. You can see it struggled when it's got to it before, trying to make that break. So we're going to look for that to try and push a little bit and again give a little bit more strength to the chart. Position of the tricks is pretty nice with an uptrend towards zero. That's one of the tricks' main goals is to trend towards zero and break through zero. That's where you look for more strength to the chart, more positive direction for it. Again, kind of mixed indicators all throughout this chart. Just sideways motion, trouble getting through the 50. Again, 50's bullish. You can see again a tough time getting through it. Kind of going sideways right now. Or maybe the slightest uptrend to the 14 and 21, but this is going to have to make a break north and push through 50 if this is going to make any kind of significant move. Key things on this chart. That downtrend line is pretty consistent. So that's going to be an important area if it makes a move to the north side to break through that trend. If it breaks through it and doesn't want to continue hard, look for it to come back down, catch the top side of it, and then try and bounce back off. We can put a trend back up this way, but because of the big gap, that's pretty consistent. There's nothing really wrong with saying that's a trend line on it, but pay attention to this gap from 0.7 from 7 cents all the way down to just about 5.5 cents. You're going to look for that as a possibility of getting filled only if it can't hold that trend line and then certainly can't hold 7 cents. It needs to hold this as a base. If it wants to come down and can't hold that, there's a very good chance it's going to come down and fill this gap. Volume is still a little low. This is intraday on this. We're only not even at to 11 o'clock yet, so it's still got time to pick up in volume. 116,000 is not terrible for volume as far as liquidity. That's not a bad thing, but we need to hold this trend line, and we need to test some of these moving averages. This purple moving average is the 20-day moving average. It's the middle Bollinger Band. You want to see it get over top of that and start to trend over that Bollinger Band. That's a good sign of strength to the chart, and the chart trying to take on a bullish mentality and a bullish look. So first and foremost, we're going to want to break through that, which is also going to coincide pretty closely to resistance. You're going to see a pretty good support level that fell through, and now it's having a hard time moving above it. This is a dynamic, chart. The moving average is going to trickle down a little bit farther, so we're going to see right around this point, around 8.5 cents, is going to be resistance from PPS and that moving average. If it can make a break above that, especially with any kind of volume, there's a good chance it's going to want to try and trend, and then test some higher moving averages, which a dime is typically a psychological barrier. Not a great deal of PPS support and resistance through there, but there is a little bit through there, a little bit of support that fell through. So we'll test that, but that's also going to coincide with that trend line. So the break of this initial support or this initial resistance, while holding these support levels and then going up and challenging this dime, is kind of what AEGY really needs to do if it's going to maintain some strength. Ultimately, break this trend line and challenge this 50-day moving average, which is coming down. Those are the key things to take a look at when following along with AEGY. Again, I'm not a financial consultant. This is merely my interpretation of the chart. I strongly advise you to do your own due diligence and consult a licensed and qualified investment advisor before making any investment decisions. Past performance does not guarantee future results. Please visit the All Penny Stocks website and click on the feature link for Understanding Pincher Plays, and you'll be on your way. Thank you, and trade smart.